Hey there, Jedi Traders. David here of TradingFibs.com to bring you a market recap and state of the indices for the week of September 7th, 2015. As always, please seek financial advisor when trading with your money, as these videos are for educational purposes only to support your knowledge of the market. See what's going through my head on any given day or week. Always make sure you have a solid trading plan and always manage your stop when placing a trade. Boy, what an end to the month. We begin September volatility run. We're going to look at that on our big picture here and have an insight into where this market needs to take care of business, whether upside, downside, and how that plays on the intraday. Let's jump right into the market profile here. We could see price action on the Russell last week opening up at 1156.3, ending off the month. Jumping into September 1st, price action gaps down, engulfing day, only to come back upside to close out the gap and finish out the week at 1136.10. Here we can see price action again falling down below the weekly opening price. We have unfinished business below. That's right, the market takes care of itself. 1096.3 daily open gap and unfinished business above. We'll take a look at that on the daily picture as well. Let's jump right in here to the YM, as we could see similar picture, but Tuesday downside opening price for the week 16,519. Price action breaking back to the upside. Daily open gap here 16,342 set on Thursday, never closed, as Friday gap down again and closing out the week at 16,120. But that's right to the T market profile, outlier and to the top. 16,519 closed. Price action takes care of itself again. Daily open gaps down below here, 15,726 with unfinished business above as well. Let's jump right into the NQ. Similar picture on the NQ. Price action coming downside. Several open gaps here. Closing out the week at 41.94, 299.25 was the weekly opening price. You could see on Thursday we went ahead and closed that out. Almost at the high of the market profile, and coming back down here 41.94 closing out the week. NQ with open points of control on market profile, including daily open gaps. Lowest down here 3997.50 made a couple weeks ago. So whether the market's going to head upside or downside in a week, I don't have that crystal ball. All I could tell you is that if the intraday setup looks like it's moving downside and we have a big picture to the downside, the higher probability of the trade working out is in my favor. Let's jump into the ES. Same picture as we saw in the YMNQ here. Open gap closing out the month here. An open 1973.50. That was on Monday. Tuesday price action coming downside and coming right back up to 1973.50. In your best interest in a market to go ahead and post those lines every week, your weekly opening prices. You could see 3 days of price action to the upside, only to reject there and come back down. 1921.25 is where we close out the week. ES also unfinished business below here, 1873.75. Open points of control above and daily open gaps. Jumping into the long-term picture, the TF here on a 100-tick chart, we can see the 50 above the the T3 moving averages crossing upside, 5 above 34. Here we could see the 4-hour chart struggle, price action breaking above the 144 on a 51.44 daily here we could see. So again, a little bit of a mixed picture, but really having a struggle holding upside. So again, that TF that we saw here on the market profile, as we saw the weekly opening price come and tag that 1115.63 and coming back downside, you can see here on the long-term TF, it's really been, there's that little nudge up during the week and to close out that open gap and back downside. So again, we're primarily focused on the 50 below the 144, as we can see here, price action still in the red, meaning bias to the downside. Bears in control, short intermediate term, the bulls are in control, as we could see. The T3 moving averages crossing upside, but again, price action this week a little bit in both directions. We had again the downside here was August 31st, moving to the upside, and then that was represented these 3 green bars up here on the daily over here on the 100-tick chart, and then coming back downside closing out that open gap and coming back downside. So really a little bit of a chop, but bigger picture still showing to the downside. As we can see here on the weekly chart, Fibonacci targets 1095.3, upside 1354.2, as we find support here at a former fib level. The monthly chart also finding support here. You saw at the 1082.7 as price action came down. Excuse me. Down here, and here we are in the month of September, already holding downside, not moving back up above this 1229.9. By the time this price action moves above there, we might be in an uptrend on a monthly chart. Let's take a look at the daily charts. We have the fib setups to the downside, fib extensions, but the fib retracement here from the high to the low, we came back about 61.8. Which if price action had broken that 61.8, we would have been back in an uptrend. But again, we haven't been able to break that, only finding resistance once again here at the 50%. So we're below that 50% retracement, and we are holding right now. So again, if I had to put a label on the TF, is what is the right now the bearish versus bullish, I'd still say it's bearish. With downside targets, we got an October 2014 low down here at 1038.8. So we'll see some significant levels, might find some resistance to the downside, find support. And if on the intraday, looking for the intraday, I'd be more, I'd be looking perhaps for the upside. If the 100 tick is still showing upside, be looking for the uptrend, as price correction might continue to move in an upwards direction. But if we continue to hold below this 50 on a 4-hour chart and 50 below the 144 on the daily, I will continue to look for the downside entries. Let's jump into the YM here. We can see the bias a little bit more convincing of direction, as we are in the red on a 100 tick, red on the 160 minute 4-hour chart, red on the daily chart, as we're finding resistance here, 17,966 on the monthly on a fib extension, finding support now at 16,105, a former fib target. Here we are on the weekly, same picture, 16,026, a former fib target, finding some support. Again, upside target up at 19,000. So eventually, that's right, eventually, with knowing that we have upside unfinished business, we've come down substantially, but we still have yet room to go back to the upside. Here we are on a daily chart on a Fibonacci extension, the 50 crossing the 50 here crossing the the 8-period moving average crossing the 50. We are below that 200-day moving average, just like on the Russell here, holding below 200 moving day average. As we roll into rollover week, and contract expiration should make for some exciting and again, continued volatility in these daily trading sessions. Here we are, full Fibonacci extension from high to low, Fibonacci retracement, Fibonacci retracement from July all the way here till August, almost coming up above 50%, now holding below that 38%. So putting on a Fibonacci extension here, as soon as we close some open gaps, might see some continued downtrend. So there's our YM. Again, I'd still label the bias on the YM to the downside. So any intraday setups to the downside, I'd be looking for when it's red is pretty much in line with the big picture. Not to say you can't trend in either direction, but the higher probability trades for me would be to the downside. Long-term NQ, here we can see the 50 below the 140, the T3 moving average is downside in sync with the 534. Seeing difficult time on the 4-hour chart. Here you can see the NQ having a hard time getting above that 144. Daily, though, has been holding up on a green together with the weekly and the monthly. We can see that we've been holding up ever since about 2010, 2013 here on the weekly, all the way up to a fib line, 261.8%, 261.8% on the monthly and both weekly, which tend to be full Fibonacci extensions. So if you're asking why did we stop here, well, that tends to be a full Fibonacci move, and so you can see the rejection here from a technical perspective. Here we can see the 50 percent fib retracement holding up right now as of Thursday. Remember we closed out, if you go to the market profile on the NASDAQ, that's right, we closed out that gap here at 42.9925. And if you go right here, again, we came right up on Thursday around that price, 50% fib line, and back to the downside. So setting up ourselves for a fib extension with an October 2014 low down here at 36.9125. Again, NASDAQ with some unfinished business below on the market profile, we might just head down that way. Again, as I said before on the YM, when we're looking for the intraday trade, we have the bias of the 100-tick downside, the 4-hour chart downside, the 5144, and the monthly and the weekly. Again, just the bigger picture. We're not breaking back to the upside. We go to the intraday, and here we see the setup, similar setup that we see on the longer term. We see on a smaller daytime time frame. We're looking for the sell signal and the crossover together. All right, we're not over trading. We're keeping ourselves patient and disciplined. We have the sell signal crossover, the 5 below the 5 below the 34 represented by the second line here, the 50 below the 144, bigger time frame, just like we just saw here on the NQ. 50 is below the 144 on an intraday. This any setup that's to the downside right here, one. Let's go ahead and take a look right here. One to the downside here, right here to the downside. To the downside again. Some of these tradable to the upside, but the higher probability trade management, in and out, whatever your trade management style is in sync. That's right, in sync with the bigger picture. Higher probability trade of working out. Now, that doesn't mean 100% all those trades work out all the time. It just means looking for the trade to the downside in sync with the bigger trend. All right, let's wrap this up with the ES, long-term ES, as we can see 50 below the 144 here on the 4-hour chart. T3 moving averages downside here on the 100-tick range chart. 50 below the 144. Again, month, we could look at the weekly here. The weekly chart, again, just like the NASDAQ, 21.2830, rejection on the fib extension, wondering why, oh why did we finally just hold up here? It's because from a technical perspective, fib extension, look how long we've been running upside. 2012, here we go, 21.2830 is the line, rejection. On a weekly, we've already started to move downtrend. On a monthly chart, again, we never managed to get up to the full fib target, but here we are finding support in 1915.47. Do we have room to go to the downside? Yes, we looked at that. The EST3 market profile, you could see down here, 1873.75 was still a little bit unfinished business below. Now, that doesn't mean this market can't absolutely rip upside and then leave this in the dust to only return one day. But I think the market, with interest rates coming up, contract rollover, volatility, we might just go ahead and close that out and then perhaps eventually move ourselves back upside again. Taking a look at the daily picture here on a fib draw, we can see that price action on the bigger picture here, all the way upside to here we are in August to a retracement around just shy of the 61.8, so not absolutely changing trend here. We're still sitting below the 200-day moving average. Price action now holding below the 38% with an October 2014 downside low here. What was that price here? There we go, 1813. So probability, again, intraday still downside, looking for the downside move. Would like to see the monthly and the at least the weekly maybe come downside. We're in the red, we're in the red, we're in the red. Doesn't mean that any intraday setup to the long can run nicely for 10 points, 5 points, whatever it is that your target is. Again, the goal is remaining in the trend, and that's what we're focused on, remaining in the trend. So we place a trade on it at this signal in the crossover over here. Price action with a stop up above here at the swing size level, and then price action moving downside, remaining in the trend. First green candle off, an opportunity to manage your stop or just exit out of the trade and wait for the next setup. Looking to the week ahead, economic data, as we can see here, Monday, September 7th, U.S. holiday, Labor Day markets will be closed. Tuesday, following through, contracts start to roll over on Thursday as we're nearing contract expiration, jobless claims, and then Friday, September 11th, that day that we remember forever in infamy here in the U.S. That concludes an insight into the state of the indices. Feel free to stop by at tradingfibs.com or any of my social media outlets to obtain more information. My trading mantra of one simple strategy: any market, any chart, any time frame will keep you disciplined. You can find me every day on Twitter at tradingfibs. And as always, I leave the crystal ball to the experts. I only trade what's in front of me and on my charts. Have yourself a blue zone day. Have yourselves a good day, a good night, and great trading to you.